Brendan Barnicle of Pacific Crest joins us from Portland, Oregon. Brendan, let's go through these Microsoft figures. I mean, how disappointed were you with them?
You know, I was actually pretty encouraged by the numbers because we saw better than expected numbers on the client side, which is particularly important and really stressed the recovery that we're seeing in PCs. And that's the really critical part of Microsoft's business. There had been a lot of controversy about whether we were going to see a recovery in enterprise PC spending in the second half of this year. We believe we're going to see that. That's what really drives our numbers that are higher than consensus. And I think based on the commentary we saw out of Microsoft, we should see bigger numbers going into next year. And that's really the basis for owning the shares.
Yeah, but we're seeing Microsoft shares falling in after hours here, Brendan. I guess people are looking at the recovery in PC sales and wondering why that isn't translating more in terms of Microsoft's bottom line.
You know, I think we had some whisper numbers that were out there that got people excited. People had seen the good news about PCs, maybe thought more of that was going to translate through. I think Microsoft also did a good job in explaining one area of weakness on the call, which is that the server revenue was about $100 million short of expectations. Now, on a $14 billion quarter, that's hardly anything to worry about. But what they were able to explain was that they did see some delays in installs ahead of their new versions of SQL Server, which is their new database product, as well as Visual Studio, which is their new development tool. As those products come out, they expect that those sales will re-accelerate and catch back up. And as we think about deferred revenue going into next quarter, that's supposed to see its typical seasonal uptick into the fourth quarter. So that's very encouraging for fourth quarter results.
That's right. Q1 is typically weak for Microsoft. Let's talk about 2010 Office, because this is the big giant coming down the pipeline and a moneymaker for Microsoft. Are you expecting better numbers going into 2010 here because of that?
We do, and we think actually that Office is one of the things that helps drive this overall PC recovery cycle. Many large enterprises only want to touch their PCs once, and so they were waiting for Office 10 to come out so they could upgrade to Office and to Windows 7 at the same time. And so that's really going to be a big catalyst for development in the second half. So we see that number continuing to increase and showing some positive results. The other thing that surprised folks a little bit was that the deferred revenue that Microsoft has to take for the new Office release, many of us thought they could recognize that next quarter. Looks like they won't now be able to recognize that until the December quarter. So that's about $300 million that gets pushed out from this fiscal year to next year.
Okay, Brendan, let's take a look at Microsoft shares, because some would say they're not trading cheaply right now, but you have an outperform rating on the stock. Give me a target price for the rest of this year.
You know, we're looking at a $40 target price, and that's based on 15 times our fiscal 12 estimate of $266. You know, Microsoft is trading at about 15 times right now. That is a bit of a discount to the market, and certainly lower than what its growth rate is. We expect Microsoft to grow earnings about 20% this fiscal year. And so we think 15 is a more than reasonable multiple. If we look 2 years out, that's where we're going for our target. So that's how that's the basis for our $40.
And Brendan, let me just ask you, what do you want to see from Microsoft going forward? I mean, Microsoft is pretty much a cash cow. Some estimate that Microsoft makes $1 billion in free cash flow each and every month. Why don't they go out and spend on something that may be a revenue generator in the future?
Well, you know, that was really one of the high points in the quarter. I'm glad you brought it up, because we saw Microsoft beat free cash flow, operating cash flow expectations by $2 billion. They had $7.4 billion in operating cash flow this quarter. So I think we'll see them do more with that. Maybe we see a dividend again, although that has not historically been all that successful for them, so I don't know about that. But we will certainly see them do more in the way of buybacks. In terms of big acquisitions, I don't see anything on the horizon that really makes sense for them. There's been a lot of speculation about them maybe doing something with Palm and RIM. I think that's very unlikely given the $1 billion they're going to spend on their own cell phone business going forward.
Okay, Brendan, I'm going to ask you to look in hindsight at 2020 here, but was it a good thing for Microsoft that they didn't get to buy Yahoo?
Well, you know, it looks like effectively they're going to get most of the benefits from Yahoo without having to buy them. So, yeah, I think it worked out for shareholders very well. We're going to see the revenue contribution from Yahoo probably starting in the next fiscal year, and certainly the size that they needed and the scale that they needed to continue to grow that Bing business and really take some share away from Google, which we're beginning to see. And yet they didn't have to pay anything up front for it other than this revenue sharing arrangement. So I think Microsoft got a great deal there.
Yeah, they did pretty well. Thank you for that, Brendan. Nice talking to you. Brendan Barnicle, Pacific Crest Securities, the #1 ranked analyst on Microsoft stock.